So let's talk for a minute about what's going on in the economy, what's going on in the markets. What are we seeing right now here in August of 2024? Basically, the market's up. We've had a good year. The S&P is up a little over 17.5% year to date. The bond market actually turned around. It was negative through most of the year, coming into the end of July. Into August, though, it's actually rebounded and it actually is positive for the first time this year. And that's good news, I think, for conservative investors. You know, when we look at the equity markets, when it opened up in August, we were on a downslide. We actually were entering into correction territory. The S&P went down a little over 10% in the first half of this month, or first week of this month. However, we've seen a really strong rebound in the equity markets, and it came all the way back, and we're actually right around the current high, within a percent or so of that high of 56.69 we had hit prior. The economy is still slowing, inflation is slowing, and many analysts have changed gears, as I'm saying here, and now are estimating the Fed to cut interest rates somewhere between 1 to 3 times this year. So that was a forecast at the beginning of the year. The economy and inflation stayed hotter than it was expected. So that started going off the table, but now it's back on the table that it looks like the Fed's going to make some cuts starting this September. The bond indexes, like I mentioned, turned positive for the first time this year. Again, I think there's an anticipation here of bond values holding stable and possibly increasing if rates on newer bonds start to decline, and interest rates start to decline going into the fourth quarter of this year. So that could be a real positive for a blended portfolio. And again, this is probably going to drive a shift back into the buying of more medium and long-term bonds for fixed investors. When we go under the hood a little bit of the S&P 500 and look at what different sectors are doing year to date, you can see at the top here, technology is still leading the pack, up 25.4% in the middle here of August year to date. So again, AI, the talk of AI, the reshoring of chip technology in the US, things like that are really driving the markets to favor technology moving forward. I find something else that's interesting. If you go to the bottom of the chart here, utilities have made a pretty large rebound. They were lagging, but utility stocks have made a strong rebound and are up over 20%. Now, if you remember, utility stocks are used in conservative portfolios because they're stable, they provide good dividends, but growth companies were leading, the growth in the S&P up to this point. But we're starting to see, with the expectation of interest rates dropping, things like utilities and the broader market is making a comeback. You look at even the lowest returns here year to date, consumer cyclical only up 5.5%, but we're only in August. So, I'm projecting that could still come in somewhere between 7, 8, 9%. Overall, we're seeing a very good bullish market taking place.